Okay, so thank you for joining this live session. So hopefully you can hear me. I've mentioned in the Discord um, to let me know if possible if you can see and hear me. That would be great. We just had some news come out on the dollar, sending it to the downside. Okay, euro pushed it up. Very, very nice. Okay. Okay, so hopefully for those of you that are watching, you can hear me. I'm not quite sure um, if you can, because I put in there, but that's not too. Okay, excellent, thank you. So, starting on the dollar index, beginning on the daily time frame, as we spoke about yesterday and the day before that, I was mentioning this high right here. So on the 4 hour, this is the high that has broken structure, meaning that is the new 4 hour leg from a bullish standpoint. So price has obviously been dragged back down into this discount because of the news that's just come out. So if price is to sustain bullish, what we'd need to see is this low to remain intact and this high to be broken above with a candle closure above as well. But until we get that, anything could happen. Okay, anything could happen because this could easily now be dragged to here, given the fact that it's a news event. So if we just have a look at that news event. So that was this one right here. So core CPI, let's just refresh this. Have a look at the stats and the numbers. Okay, so yeah, so it has come negative for the dollar, which is obviously dragged it, like I've just said, to the downside. So, and what do we have below this low right here? We have a 4 hour imbalance right there and another 4 hour imbalance right there. I've just coupled those together with an 8 hour label right there. So an 8 hour imbalance. Okay. For now though, you know, although we can potentially come down into there, I am still bullish until this low is taken. But even then, we've come into a bullish imbalance. So until basically this low is taken on the daily, then I'm bullish still on the dollar because that is the daily low. So anything within here could just be noise. Anything within here could just be noise for it to come down lower, fake a few people out, and then go. Because we're still bullish overall. Okay, still bullish overall on this time frame, coupled with these structure points right here. We have the high, the low, lower high, lower low, higher high. Coming to discount, price has trickled back to the upside, creating internal bullish structure. Okay. One thing I'm going to mark on as well is this daily demand. So this bearish candle before the bullish move. Right there. Okay, so I'm just going to put that to the center. Okay, so we reacted off of this demand. This was the one that swept that low before breaking highs. came down into there, nice reaction, came down into there, took out the previous monthly's low. Because looking at the bottom there, you can see May, 16th of May. This is now June. So it took out the liquidity of the previous month to the downside. And has obviously soared to the upside. So this potential pullback could just be a pullback. What I also like about this as well is also on the daily, it's closed above this, which is fairly significant in my eyes, because that shows the momentum is even to the upside on the daily as well. So yeah, just one to look out for sure. So let's have a look at GJ. So what I want to do is just highlight the fact that on the monthly time frame on GJ, we have this right here, okay, which is a monthly supply. So it's the last bullish candle before that huge bearish move right there. Now what we also have is a sort of monthly resistance, I guess you could call it, which also aligns with that order block right there. Now with this as well, on the weekly, what I've noticed is all the way up here, if I just go to the line chart, we've got a weekly area of resistance, so to speak, because we've tapped into this area of 223 multiple times. Okay, and I've just used the line chart to sort of finesse this area, because we've got that right there. Price comes into it, price comes into it once more, price comes into it again, and again, breakthrough, made that high, continuation. Look what we have right there. We have a weekly imbalance with what? Liquidity below. So I do believe GJ can continue higher, because remember the current market price is where we are now, around 200, 201. So we could still continue to the upside. Although we are extended, it doesn't mean to say that we have to have a pullback, because this has been going to the upside for the entirety of 2023, for the entirety of 2022, and for the entirety of 2020 and 2021. So for 4 years, this has been in a bullish market, in an uptrend. For 4 years. Okay, so, and in order for price to actually do that, it had to take out some sort of liquidity to the downside. So this low was printed in 2016 over here. Price obviously pulled back up. It would have reacted off of something over here, but I'm not too interested in that at the moment. I'm interested in the fact that price took out that liquidity and then just surged to the upside. Price has done something else that's very important. It's closed above this high right here on a monthly perspective and on a weekly perspective as well. So that to me says that the structure on a monthly time frame is bullish. Okay, because we've now just done that. We've had the high, higher low, higher high. Okay, I know that on a 12-month perspective, I can't look at the 12-month on this one because of the data feed doesn't go all the way back. So if we just look at FXCM, now from a 12-month perspective, we are bearish. So this is where it gets interesting, because if this high gets violated and in 6 months' time this yearly candle closes above this high, this would have created sort of minor, internal, whichever word you want to label it as, bullish structure within this whole entire down move, which will be very, very significant for the pound against the yen, in my opinion. Because, you know, understanding that fact, if we just go back to the 12-month on this chart, we've got all of this. We've got yearly imbalances up here coming in at 300, 345. We've got another one right there, about 400. So if this sustains, this could be a massive recovery for this, in my opinion. So could be an interesting one for sure. So looking at the monthly one once more, this is back on Oanda, because I do prefer looking at Oanda, because to me, what I've noticed is the data feed is a little bit more clean and precise. There isn't so many, opens and closes and gaps here, there, and everywhere that we see on for the likes of FXCM that I've noticed. But, I do like FXCM because you can go back further. So that's why I do like to look at the two data feeds. So looking at the weekly then, we can see that when price was down here, if we remember, when I was sort of analysing GJ, we're saying about this monthly candle coming up to here, came back down, come into this weekly support, which all that is these weekly candles together. Used that as support, price was pulled back to the upside, and then price has done the same thing. So it's come up, it's used those two bodies there as support, and it's continuing to the upside. So from a daily perspective as well, what I can do is now update this structure, because on the daily we actually closed above here, above this high. So the daily is still bullish. Basically every time frame apart from the 12-month is bullish on this, in my opinion. So yes, that's the daily, the 4-hour as well. So this is what I was discussing yesterday in yesterday's live sessions. The fact that we were putting in bearish 4-hour structure, but it was internal to the bullish daily structure. So what I mean by that is we had the high, the low, lower high, lower low right there. Okay. But again, that just came into support and then flung to the upside. Now what price has done is confirmed even on the 4-hour that we're bullish once more, because we've now closed above that most recent structure point right there. So once again we're bullish. So what we're going to be doing is waiting for pullbacks to potentially go long on this. Okay, that's my thought process right now on GJ. So where would I be looking at to go long? Let's have a look at the weekly. Nothing on the weekly. Daily, there is that area right there, and there was actually a really, really nice setup on there that unfortunately I missed. So basically what it was, so we've got the daily support right there, two bodies bringing it through. If we go back to the 1-hour time frame, take that off a minute, price came into a discount right there, and we had the 3-pin right there. That would have been an entry to target the high. So very, very nice setup right there. So what I'm looking for now, if we can come back down into there, that would be nice. So I'm just going to put that on there. The fact that it's already been used doesn't matter. It can use it once more if it wanted to. So that is an area which I'm looking at. If it does come down into there, that is. Okay. Which also aligns, as you can see, very, very nicely below the 50% of that entire move to the upside of that 4-hour leg that we just spoke about, following those red dots. Okay, let's just assume that is the high. We don't know if it's the high or not, because it could go higher, at which point we'd drag the Fibonacci higher. So I'm just going to leave that structure point off, but I'm just following that 4-hour structure right there. Okay, that's very, very nice. Also to the downside, not to mention, we do have this 4-hour imbalance as well. Okay, so on the daily, we could even come all the way down into there. Easily. Why? Because that's number one, in a discount of that leg. Number two, it's a daily level of support. And number three, we've got a 4-hour imbalance right there that could be filled, or could want to drag the market down into there. Okay, so quite a few reasons why price could pull back. And not only that, once we see an external range liquidity area being taken, typically what we see after is a pullback. So the fact that these highs were printed not so long ago after taking a high that was printed in 2008 over here, sorry, 2015, right here. So basically 9 years we've not seen these prices. And we've just took out that high again. And another thing that we haven't done is pull back on the daily. So we could use this low right here if we did want to come down even lower, because what we have to the downside is this daily imbalance right there. Okay, we've got that daily imbalance right there. So again, that's just following structure. That's just following the time frames. Take that away on the daily. We don't need to see that on the daily. So that's what we could be looking at potentially. I do actually prefer this one coming down into here, but we'll have to see what we do there first of all. Okay, so what I'm going to do is draw that on like so. Okay, and I'm going to take that off. I've just marked this on right here as well because this is the most recent daily resistance. It's those two bodies. Okay, if this daily candle closes above the high, more than likely we're going to continue higher. If this daily candle closes below this blue line, these two bodies, then there could be a chance that price could want to pull back, whether it be into there, into here, or all the way down into there, like we've just said about that daily imbalance, just there. But for price to do that, it would need some sort of significant injection of liquidity, which isn't short supply. We can see here, look, when it wants to move, it can. All of these tiny daily candles just to recover 4 or 5 days of just absolute meltdown. So from the start of May, basically the whole month, it just recovered that, because you've got Friday the 3rd of May at the bottom, and then at the top of that leg you've got the 29th of May. So the whole month recovered 1, 2, 3, 4, 5 days of bearish structure. So that just shows you when liquidity is pumped into the market, it can move significantly faster than usual. But it still respects structure. This is why I like this pair a lot. Even though we came down very aggressively off of that weekly imbalance, it just respected structure. It came into this weekly support and away we went. Same things obviously come up, come into that, and it could be why we're seeing even more bullish momentum right now. So that's GJ. That's what I'm looking for on GJ. What other areas can we mark on? Okay, I'm just going to mark this on right here. Two bodies bringing it through, which also aligns, if I'm not mistaken, with, yeah, that daily area right there. So, and obviously we've got the daily imbalance there too. Okay, so that's GJ. Let's have a look at GU. So GBP USD. Having a look at the weekly time frame. I'm going to look at the monthly time frame actually to begin with. Having a look at the monthly time frame, I do think that could be on the cards. I really, really do. We're looking at 1.32 on GU. One thing we have ran back into, but it doesn't necessarily mean we've got to react from it once more, because we've already had a reaction from it, is this monthly resistance, We used it once. It can use it again, but like I say, it doesn't have to do that. What we've run into to the downside is this monthly support, two bodies bringing it through, which also aligned within this monthly imbalance, which is very, very nice to see when you've got sort of an alignment of technical analysis methodologies. So yeah, that's what I'm looking for, or looking at on the monthly, is bullishness, pretty much. On the weekly, what we also done on the weekly, it's more visible on the daily, which I'll show you in a moment, is we come down into this, take this off a minute. We came down into this discount. So let me go onto the daily and you'll see what I mean. So following this blue dot structure, right, we had a low, and this was the low after this pullback right here. So this was printed October last year, okay, at the beginning of October last year. So we had that low right there, printed a high, higher low, higher high, higher low. Price then rallied up from here and didn't achieve a discount. Therefore, the structure point continues to go higher. What I mean by that is every time price turned around, you see the 50% is here. Every time we come below there, that's a discount. Price didn't give us one until we eventually reached that high. Prices came into a discount. Where did it come into? It came into those two daily bodies right there. Okay. And this is something that I seen today actually as well that I missed. It would have been a phenomenal trade that was taken, or that would have been taken on the 22nd of April. Following every single step to the T. We've got discount. We've got a daily level of support right there, following daily bullish structure. If I then go to the 1 hour time frame, you can see that is the position right there. There was a 1 hour 3 pin right there. That would have been the entry with a 42 pip stop, targeting that 4 hour sort of liquidity band right there. So just to recap, this is now the 4 hour time frame. We're just now zoomed in a little bit, targeting that right there, which is the bullish candle before all of this bearishness. Price has just tapped into that, which would have been a 1 to 11.7. Just there, look. I mean, granted, it would have took, a lot of patience to get to that point, but let's have a look how many days that would have took. 50 days. So pretty much more or less 2 months. But this is more of a swing style system, this is anyway. But yeah, that's what I'm looking at on GU. So on the daily time frame, once we close above this high on the daily, then this would be the new low. But once we close above there, we're going to go there, I believe. We're going to go there. Once we close above here, yeah, I definitely do believe that. Because then price would have created this structure. So from this low to the high, low, wherever the high may be. And then at which point we might have a pullback, in which point this will be the new leg to then get another pullback to potentially go higher. So all is aligning very well. It really, really is. Let me just take this off the daily. So that's what I'm looking for on GU. That's what I'm looking at on GU, sorry. For now, just a waiting game more than anything, because I want to see a pullback to be able to get into the market. Let's look at euro dollar. So euro dollar came in beautifully to this daily support. So this is 2 daily bodies right there, look. All right, but before I get into that, let's look at the weekly and the monthly, in fact. So on the monthly, I've just highlighted this monthly support area. Again, just gathered from the line chart. Very, very easy to do. You can see multiple taps on this area. That's why I've just labeled it monthly support. Going back to the candles, you can see even the wicks go through it sometimes, as well as the bodies. On the 12-month time frame, I've just highlighted those two bodies right there. So what price has done is it's come into that yearly open and then it's yearly support, okay? So coupling that with the weekly, obviously what we've got right here is a significant higher time frame support that price has just come into. So with that in mind, we need to be wary of the fact that price isn't just going to continue down and down and down and down and down. At these areas is where reversals can happen. So what price has done, obviously it's coming to a discount, we know that. But it's more the fact of where it's coming to. It's coming to that, okay? So understanding that these highs could potentially be taken, they really could. So it's just one to be aware of. I am still aware of the fact that this is still in premium to the daily, but it's just that fact of we're coming out of a yearly support. So if I just go back to there, look, and make that visible on the daily, if we go back to the daily, you know, this is a very strong area that prices came down into. So that high right there could be vulnerable. If that high right there gets closed above on the daily perspective, on the daily time frame, then it's going to be this high, then this high. Okay, then even higher than that potentially, but we'll cross them bridges when we come to them. But yeah, that's what I'm looking at on this. On the 4 hour, however, if we remember, on the 4 hour, we did close bearish, so we closed below the recent structure point on the 4 hour time frame, which was as follows. So this is the low, the high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, lower low. So this is the first sign of a bearish break of structure. For confirmation of bearishness, we need a second lower low. This is just the first lower low, so it doesn't really mean too much at the moment, because price could easily, as I've just said, continue to target that high right there. All right, because the news event has just come out negative for the dollar. So that's just something I'm looking at on euro. If we do come into this area, into this premium, and decide to turn around, obviously we are in premium prices now technically of this 4 hour bearish leg. I'm just going to mark on some areas. If we go to the weekly, we've got that there, but again, I'd prefer if it would go up higher because it would make sense. But I'm just going to mark that on anyway. Weekly resistance right there. You can see it's been used 1 week, 2 week. It can use it again, but if we close above there on a weekly, then it's time for these highs to be taken. So yeah, that's what I'm looking for on euro dollar. So that pretty much wraps this live session up. Once again, if you could please confirm in the chat if you can hear me, that would be great. But until then, let's just remain patient, because I'm looking at the pound yen for potential entries. It's just a matter of sort of where the market allows us to get in. But until then, yeah. So let's just remain patient, keep the risk minimal. No more than 1% risk typically, as we keep outlining. And I'll see you in the second live session of this afternoon, which will be at 3:30 p.m. So thank you all for watching. Take care and trade safe. Bye bye.